When the world is saying that the US market is in a bubble, AI is a bubble, market's gonna crash and correct, how did you get that conviction to still put 65% of your liquid portfolio in the US market?
There are strategies to protect your portfolio, which I've already done. I have. People say that Nvidia is in a bubble because it has gone like 20x, 30x in the last 4-5 years. Have the earnings of Nvidia gone up too? So if the answer is yes, then honestly it's not in a bubble. Now many people will write like Bitcoin has no fundamentals. Cool, that's your opinion. But Bitcoin has survived. Right? I mean, even if you would have picked Bitcoin at its top in 2021 and then went through the entire 80% correction, then also you would have made 80, 90% or close to 100% profits on that without buying any single dip. If you speak with people who are living in UAE and ask them where do they put their money or where they are excited to put money, the answer 9 out of 10 times would be realistic. If you would have bought like something in Emaar in let's say 2020, 2021, that property would have doubled. But guess how much money you would have made if you bought Emaar stock?
How much?
You would have at least made 3x, 4x.
If you are investing in India today, are there any pockets of sectors which you feel are good bets?
So,
Hey guys, welcome back to another episode of the 1% Club Show. We are here in Sharjah today in this massive 5-bedroom apartment with none other than Mr. Akshat Shrivastava. Akshat is probably one of India's largest finance influencers and one of my favorite. And in this episode, we're going to be talking everything about how does he invest his money? What is his investment thesis? Like how has he sort of done his asset allocation and what is his future bet on how to grow your money? So make sure to watch till the end because this will be one banger of an episode. So Akshat, thank you so much for agreeing to do this.
thanks, Sharan. Appreciate it.
So Akshat, let's start off right off the bat. You've been really popular on social media in the last 1 year because of your recent shift from India to Dubai. And this has gotten a lot of attention, not just on social media, but also from traditional media. So can you tell me the why behind why did you move your base from India to Dubai? Because everybody's thinking about it for the tax reasons. But I would love to know what are the other reasons beyond the tax savings.
So, but honestly, that move made sense to me. I just want to issue a clarification that it's not as if that I've moved out of India.
Yeah.
Goa is still my home.
Okay.
That is where I spend 4 months a year or roughly 4 months a year
Right.
due to taxation purpose.
Right.
Dubai is like a work base for me right now. So in a year, I spend like maybe 6 months in Dubai, 4 months in India. 2 months I travel mostly across Thailand, right, or Southeast Asia. So this is how I've been living the last 2 years.
Sounds like a dream life. Well, 3 different places across Asia. Goa, Dubai, and Thailand. Now, I understood your lifestyle, very cool lifestyle. I'm sure a lot of them would be like, Akshat, how do I become like this? But for that, guys, you need to learn how to invest like Akshat. So, Akshat, I would love to know what is your current asset allocation today?
So I have a fairly straightforward approach to investing. I categorize my investments into liquid and illiquid assets.
Okay.
So 30% is illiquid, 25 to 30%, which will be primarily real estate.
Okay.
That's it. And almost 70 to 75% would be liquid, which is primarily equities.
Okay.
So that's it. I don't invest in debt products.
Okay.
Zero investments. I do not have mutual funds.
Okay.
I don't do any active mutual fund investing.
Okay.
If I'm buying mutual funds, then I would primarily stick to indexes because those are fairly easy to liquidate for me, right? I would know when to exit,
Sure.
say, right? So I look for that rotation of capital, right? So
wait, 75% is liquid. Can we deep dive into that? So that's 75% liquid.
Yeah.
Can you break down all the assets within that liquid allocation?
So it would be categorized into 3 or 4 key categories. One would be Indian equities, one would be US equities, one would be other country equities like Europe, right? So I've bought some there. UAE, so I buy stocks in UAE, right? I'm bullish about this market. Very different tangent, right? If you want to touch upon that. And cryptos. So these are like 3-4 primary asset classes within my equity bucket.
So that 75%, how would you split it in numbers? Indian, US, European, UAE, crypto?
See, it's hard for me to kind of package it. The reason being that I do a lot of options. So it's like you put your house on rent and you're getting an income. So similarly, I try to generate income from the stocks that I own, right? So that's covered call selling. So this again is a low cost strategy that I apply.
No, but that's more from an income generation point of view. I'm asking in terms of...
But I have to reserve for it. So therefore, I was saying that while, for example, if I'm keeping, let's say, $100,000 in my account, hypothetically, or 100 units of money in my account.
Based on that, you can get
Exactly.
those.
So I can leverage. So that call option is separate. That's based on the actual portfolio. But if I'm selling, let's say, cash secured puts, now that's separate, right? So I'm keeping like a certain reserve fund just to sell those cash secured puts.
Correct.
So again, that is cash, right? If you just investigate.
No, but you can include that in your US portfolio for the purpose of
right now, so last year has been a year where I've ramped up my US equity investments.
Right.
So at this stage, if I have to just split between US, India, and international, then it would be approximately 65% US, right? Maybe 15-20% India, and the remainder would be international, right? So that's how I would calculate.
When you mean international, you mean Europe and UAE?
Yes. Correct.
Okay. So you mentioned 65% of your liquid portfolio is in the US market right now. I think you also publicly talk about this and show this on your Instagram, on your YouTube channel. I think that portfolio is $1 million, if I'm not wrong.
Yeah.
So when the world is saying that the US market is in a bubble, AI is a bubble, market's gonna crash and correct, how did you get that conviction to still put 65% of your liquid portfolio in the US market? Right. The reason I ask this is because if you remove the AI stocks from the US index, the US index actually is a negative. Only the AI stocks is the one that's making it push up. So what's your thesis behind this?
So 2-3 points there, right? So which maybe like beginner investor kind of miss. Number one is that I have insurance in a way, right? Because when you are playing around with options as an insurance, then your portfolio is protected. So there are strategies to protect your portfolio, which I have already done.
So how does it protect? Let's say there's a $1 million investment in US market.
Yes.
Tomorrow something Trump will say and the market corrects by 20%. What happens to your portfolio because of this risk management you have done?
See, it's like this, right? The index, let's say, is at 100 units. Okay. And if you don't,
is that 100?
100 units.
Okay.
Like, so it's at number 100. Okay. Now when 2008 type correction or 2020 type correction happens, the market can go from 100 to 60.
Correct.
That's a 40% dip.
Correct.
Now, my $1 million portfolio, let's say it has equal beta, right, compared to this, what I was talking about. So my portfolio will also correct by 40%.
Correct.
Right. So far, I hope this is making sense.
Makes sense. Beta means, guys, the volatility is the same as the overall index.
Portfolio. Right. Okay. Now, if I have to protect my portfolio, what I would say is that, see, boss, like, index is at 100 units. I am okay with a 20% drawdown on this portfolio. So till then, it's fine because, but then there are these type of 10-20% correction which happen very frequently. So not a problem there. Gir jayega, then it will come back up. Not big a deal. I'm just trying to hedge for a freak correction, right? So what I would do is that I will buy a put option at 80 units, right? So with an exercise price of 80, right? In this example. Now, if the market corrects to, let's say, 70, right? From 100, it goes to 70. I should be facing a loss of 30%. But because I've bought a put option at 80, my maximum,
sell it at
exactly. I get to sell it at 80 and recover that 10%, right?
Makes sense.
So the maximum drawdown on my portfolio will be 20%, right?
And you've done that for the whole portfolio that you've done that put up.
I looked like a mad person when I did it last month, but now, like the community that I run, it's really thanking me and that
because the market has corrected as we speak.
Yes. So as we are speaking, the market is correcting, and even those put options go up in value. So
correct.
Kind of even hedge for the fall that I'm currently witnessing, so to say.
So as a professional investor, you know how to do all of these things. So you're like, it's fine if the US market is looking like a bubble. You have
so let me comment on that as well, right? I mean, it's not as if that only the US market is in a bubble. I think everything is in a bubble because the money itself is in a bubble, right? If you just think about it, the US used to have $10 trillion of debt pre-2008. Now the debt is $39 trillion.
Right.
The debt repayment itself is $1 trillion plus a year.
Correct.
By the time Trump leaves office, it is estimated that this debt will at least go to $47 to $50 trillion, right?
Wow.
So in the last, 17, 18 years, I mean, if we look at, there has been an explosion of debt, and therefore everything feels like a bubble. If you go and speak with like real estate investors, they will say that, real estate is in a bubble. If you speak with like, Indian equity investor, crypto, okay, it's also in bubble. So everything is in a bubble.
So I think the reason for that is simple, right? Like if there is a lot of inflation happening in the economy, that the value of currency is going down at a very fast rate. The value of assets goes up, right? Because if the purchasing power of the currency goes down, that's when assets all automatically go up, which is what we saw with gold as well recently. And what about Indian markets? You said about 25% of your liquid portfolio is in the Indian markets.
Yes.
And you said even the Indian markets are looking overvalued, right? So if within the Indian markets, how do you invest? Like, what's your sector allocation? What are your bets for this year?
Right. So, see, I mean, honestly, like, we need to understand the concept of bubble in a way that how does each of us define bubble, right? So everyone would have a different definition of bubble. My definition of bubble is that if the earnings growth rate of a company, so let's pick Nvidia, right, which is a classic case study on bubbles, that people say that Nvidia is in a bubble because it has gone like whatever 20x, 30x in the last 4-5 years, right? Even more than that, right? So now people would say that, okay, because it has gone 20x, 30x, it's in a bubble. Now that's a wrong way of looking at it, because you need to understand, fine, price rise is just one side of the equation. You also need to look at the earnings growth of Nvidia. So if you factor that in context of how much the prices have gone up, have the earnings of Nvidia gone up too? So if the answer is yes, then honestly, it's not in a bubble. Now you can apply that theory to a market also. Are the earnings of the Indian market catching up to the price growth that has happened on Nifty 50? So the short answer there is that India's market right now is having an earnings problem. Even if you consider HDFC Bank or if you consider Hindustan Unilever, Asian Paints, some of the top companies in India, they are witnessing an earnings growth of somewhere around, let's say, 8 to 12%.
Okay.
So that's not very high earnings growth. But if you consider Nvidia, now the earnings growth itself, there would be more than like 50% CAGR. Now that's, so you have to see things in that context and then figure out that, hey, is this truly in a bubble or not, right? And bet accordingly.
Okay. So considering that the Indian market, you're saying that the earnings growth is not there, not fast enough.
Yeah.
So where exactly have you invested in the Indian market? Because majority of the audience here, even if you talk about the US market, they're more comfortable investing in India. So what would be your advice on if you're investing in India today, considering that the earnings growth of the overall market is not that fast? Are there any pockets of sectors which you feel are good bets as we speak right now?
Yeah. So here, like, the mental model that I'll use is very simple, right? So I would divide this into maybe like 2-3 buckets, right? So one is that would the company or does the company have any kind of research moat? Okay.
Research mode.
Research, right? So if it is putting a lot of money behind research, then aage piche chal ke it's probably will do well because it will have some kind of innovation coming from its research.
Correct.
So that's one. Second is that how strong is its product, or does it have any kind of product moat, right? For example, if you consider Google, now Google has a massive product moat. Everyone needs to apply search. 4 months, 5 months ago, there was a lot of questions that, hey, Perplexity people have started using. Now Google as a product will not be used. That did not stand up. In fact, my portfolio, I invested crazy amount of money on Google and made insane money on Google, right? That did not survive because Google as a company has research moat, product moat. The third moat that most of the Indian companies miss is a distribution moat. So if you apply all these 3 things,
that's
right?
Tough.
Research moat, product moat, and distribution moat, it's hard to identify even 2 companies in India. Right? So that's a problem. But if you go to the American market, you will see a series of these companies, right from Nvidia, which sells processors globally, right? For example, even in UAE, there was a recent deal that was done with Nvidia. They are selling products globally, right? Helping build data centers globally. If you look at Meta, almost close to 40% of the world uses Meta products every single day. That's their daily average users, right? So these companies are going to still command, like, in the next generation of business, right? Or the next gen businesses that are being created in the AI world. These companies, which are hyperscalers, they are going to still command the most premium. Therefore, I continue to bet on the, whether we call it bubble or whatever. So I continue to invest there. India, coming back to the question, which companies are likely to do well? So loan giving companies are going to do well, right? So I still invest a lot of money. Banks are going to be consistent compounders, so to say, but you have to buy value. I keep on mentioning one sentence to my community also, that India is a tradable market, that you have to buy cheap, sell it when the time comes. Classic case study could become IT, so which is where I'm putting a lot of money right now, right, in Indian IT. I'd put a lot of money in banks around 1.5-2 years ago. I'd put a lot of money on small cap, mid caps, right? Then I exited it at almost 80-90% profits, right? The entire bet. But yeah, coming back to the thesis that I feel that Indian IT is going to be okay. People are expressing a lot of dissatisfaction, but the negative news has been factored in. But see, my fundamental comes from not from long-term investing in India. My thesis of investing in India is buy and rotate, right? So swing. Exactly, right? So swing trading. So in swing trading, you always have to look for sentiment analysis. Sentiments are really, really bad on Indian IT right now. I feel that whatever bad stuff had happened on IT stocks, it has already happened. Of course, there can be 5-10% correction with the global markets, but we are kind of narrowed it down. And then there would be a bunch of companies which, if available at reasonable valuation, good companies would be somewhere like loan giving companies, fintech players. So these are all good companies.
So one is IT, second is lending companies. Yes. Anything else in India?
Tech is very good. So for example, now you need to define tech, right?
No, you said IT, no? So same.
IT is, yes. So like, for example, new gen tech companies, you can call them, because every company, even Lenskart calls itself a tech company. Now, really depends how you're defining tech. It's not IT, it's not tech according to me, but many people call Lenskart a tech company.
Right.
But if you look at it, for example, Zomato could expand its product line horizontally and vertically.
Sure.
It can go into a series of businesses, right? Lenskart cannot. So theoretically, if you look at Zomato is an excellent business. I had invested in Zomato and made very good money, almost 3x money, right? Then I exited. So I don't hold Zomato stocks now. Because it has opportunity to expand its product line both horizontally and vertically. It can enter into new businesses.
Sure.
For example, if you would, be it restaurant business, or if it wants to create like events line around it, it's already doing it. If it wants to start like a cash oriented company, if drone delivery comes, then Zomato becomes a good test subject on those lines. Bunch of different businesses.
So basically, you're looking at new age internet businesses which are trying to disrupt something.
Having said this, you have to be mindful of valuation. Zomato right now trades at 1200, 1300 P.
Right.
This is absolute crazy. Nvidia trades at 50, 60 or whatever.
So then you're playing a sentiment game. You'll see when the sentiments are really positive here, you'll ride that wave and then get out. It's not a fundamental bet.
So technically all companies, or like majority of these type of new age tech companies, are good. It's just that at what valuation are you buying?
Fundamentally all are bad. If you look at just from a P multiple.
Not really, right? I mean, for example, if you consider Policy Bazaar, or if you look at Zomato, if you look at Swiggy, all these are strong businesses. They are likely to survive in the next 5-6 years. But it really depends that are you paying the price of that 5-6 year wala part right now, right? So that's what, people are extracting the price at.
You also mentioned about some international markets apart from these two countries that you invest in. You mentioned Europe and you mentioned also the UAE market. Can you delve a little bit deep into that? Like, how are you investing in these markets and what are you actually seeing in the European market and the UAE market? Because that's not the first thing that an Indian thinks of when investing in the stock market.
Right. So, if you speak with people who are living in UAE and ask them where do they put their money or where they are excited to put money, the answer 9 out of 10 times would be real estate. Right? So, you know what? Dubai real estate mein bahut paisa hota hai, right? So that's the natural assumption. But go and check Emar's stock, right? So Emar is one of the leading developers.
They're the ones who built Burj Khalifa.
Exactly, right? So yes, Dubai properties, if you would have bought like something in Emar in let's say 2020, 2021, that property would have doubled. But guess how much money you would have made if you bought Emar's stock in that same time frame? You would have at least made 3x, 4x. Okay. So it's not a bad idea to pick and look at developers or some companies in UAE which are doing exceptional work. They trade at very reasonable P, right? So the last I checked, Emar's P was roughly around 10, 11. Right? So that's how much it was trading for.
Okay.
And if you compare a comparable company in India, it would at least be trading at 35, 40 P. So yeah, so I mean, there are multiple such opportunities in UAE's market. It's just that this is a hidden gem, right? In a way, right? And it might still take time to mature. But if you learn about it, if you do a little bit of experiment in this, then by the time this market matures and if you are well placed, then a lot of money could potentially be made here.
Primarily, there are only 3 sectors here, right? From what I understand, there is real estate, tourism, and financial companies.
Yes.
Right? Is there any other
Retail is big. A lot of startups are coming up. For example, Noon is one startup. Kareem. These are all big startups now.
But you can't invest in them, right?
You can invest in some. For example, Lulu is one group which IPO'd.
It's a Kerala company, no, Lulu?
Yes.
They are IPO'd here also?
Yeah, so they are. Right. So
that's in the retail segment, right?
Retail.
So you bought those kind of companies?
You can buy a lot of government-oriented services. For example, Salik, right? So Salik is basically like every time you travel in Dubai, you would see a Salik board. It's basically like toll collection, which automatically happens. More number of cars, more number of people, more real estate growth. But it also means that more cars on the road, which means more collection of tolls, right? So that's a government clean run company, so to say. So yeah, so I mean, there are multiple such opportunities. Banks here are well capitalized. They're some of the strongest. So yes, I mean, all those options are there.
So how are you investing in these? In like individual stocks you're buying, or you're buying individual stocks?
Yeah.
Okay. And how are you, which platform are you using? Is there like a separate app?
So yes, so you need to be a tax resident or resident of UAE in order to do
invest in this.
Technically speaking, because you need a number from the Dubai Financial Market, DFM, right? So they issue a registration number to you as an investor. And in order to get that, you need to be a resident, right? Practically speaking. Now, they might democratize the process going forward, right? I'm not sure. But if that happens, then yeah, the global market will get global investors will
so FIs will start coming to UAE then, if that
in a way, yeah.
So that is the UAE market, and there you're investing how much? Like 10% of your liquid capital?
Right now, I'm trying to build it more, right? So I started out with maybe like 3% or something. Every year I'm just increasing.
The more you're living here, the more you're familiar with this place and what are the businesses that are booming.
Exactly. Yeah.
And the last one is Europe.
Yes.
Europe mein kya hai? I thought Europe, the entire economy has slowed down.
No, so it's a hedge against a lot of things, right? Okay. For example, you would have companies like Louis Vuitton. ASML is a leading company, which is a Europe-based company. So a lot of generational players are there, right? Which you can pick, right? And they act as a good hedge to your US portfolio. So it's more as a hedge, right? That's the type of companies are very different. Novo Nordisk is again like a very renowned player.
Pharma company.
Yes, pharma company, right? So that is there. Maersk, all those companies are there.
Right.
On top of that, what you do is, or what you get is currency diversification, right? So for example, this year, Euro has gone up in value itself. So even if your stocks didn't go up in value, because of Euro appreciation, you kind of made some money on that currency.
But how is Euro appreciating against other currencies? What is the reason?
Why is Euro appreciating against other currencies? A lot of reasons, right? I mean, it has to do with US interest rates. It has to do with the Japanese trade unwinding. So how the global dynamics play out. Europe itself is trying to relax its taxation norms, try to appeal to a lot of rich people. So they're giving more investment opportunities. So there is more demand for euros compared to other currencies. Therefore, that's what economics tells us, that when there is a demand for currency, it will go.
So, like if I have to compare a UK with the UAE where we are, why would a rich person pick UK? Because they can't compete, right? It's 0% tax. UK will still charge me some tax.
Yeah. So just coming back to that point and I'll answer this. See, I mean, like US companies, even European companies are global in nature. For example, if you consider Louis Vuitton or ASML, these are technically European companies. But it's not as if that they are just selling their products in Europe. They're selling their products worldwide.
Correct.
Plus, they are legacy brands, right? So it's not easy to substitute something like ASML, right? It sits at the top of the...
What is ASML?
So ASML manufactures lithographic machines on which NVIDIA chips kind of are made, right?
Yes.
So they supply to TSMC, NVIDIA, all those other bunch of players. So that is where the kind of waterfall starts, right? One could argue, right? So these are hard companies to replace. I mean, people pick UK versus UAE for very different reasons, right? So there would be a bunch of people who would optimize for their lifestyle. They might like UK's weather or whatever the setup is there, proximity to you. You know, it is in Europe, so you can travel more easily, whatever, etc., weather, etc., etc., right? UAE, people might pick for very different reasons, right? So they might be running certain types of business, which kind of makes more sense. They might be optimizing for their wealth in a way, because rich people typically keep their wealth across multiple hubs, right? And if someone is a rich billionaire, hypothetically in UK, it's not as if that they are completely uprooting everything, closing all their bank accounts and, moving to XYZ country. They might be keeping one base in UK, another, creating one more base in Singapore, creating third base in UAE, right? So that's how it goes.
Got it. So we talked about the capital markets across the world. Now let's get to the last part of your liquid asset, which is crypto. Right. And as we speak, crypto has not been doing that well. There's been some correction. So what are the cryptocurrencies that you're invested in? And how do I actually look at this asset class right now? We've seen so many ups and downs in crypto in the last 4 or 5 years that, we've been creating content But as we speak right now, what is this market correction of crypto looking like according to you? Are you buying more? And what can I expect in the next 5 years for the crypto market?
Yeah. So I only own Bitcoin and Ethereum. Almost 80-85% of my crypto is Bitcoin and remainder is Ethereum. I don't even have a third crypto asset.
Okay.
That's one. Second key point is that crypto is always volatile. Why? Because it's a smaller base. So if you look at the market cap of Bitcoin, it is 1/10 that of gold, right? So of course it's going to be a very, volatile asset. It will keep going up and down very aggressively. If there is bearish sentiment on Bitcoin or crypto, then of course Bitcoin is going to correct quite aggressively. And opposite happens, that whenever there is a bullish sentiment, then crypto runs or Bitcoin runs so fast that people are unable to chase it or struggle to chase it. So it's a part and parcel of that asset class. That's how you need to see it. If you're someone,
how much percentage of your money right now is in crypto?
Around 6%, 5 to 6%.
Got it.
Right, but I'm okay taking it up to 10%. Right. For example, you asked me that, hey, how are you thinking about the crypto market right now? Everyone thinks that, hey, I invest like $100 today, it should become like 101 tomorrow, then 102 the day after tomorrow. It doesn't work that way, right? So you just have to understand the nature of the asset class. I'm at 5-6%. I'm happy to put it and bring it up to 10%. Right now. Right. So, why? Because the fundamentals on Bitcoin hasn't really changed. Now, many people will write like weird comments that, Bitcoin has no fundamentals. Cool, that's your opinion. But Bitcoin has survived. It has survived much worse, right? For example, if you study the 2021, 2022 phase, when Bitcoin corrected, it corrected by 80%, right? This was just 3.5 years ago. Okay?
Right.
And it's not as if that it got demolished, right? I mean, after that, right? I mean, even if you would have picked Bitcoin at its top in 2021 and then went through the entire 80% correction and held Bitcoin up until a couple of months ago when it hit 125K, then also you would have made 80-90% or close to 100% profits on that without buying any single dip. Okay?
Right.
And at that time, if you compare the macros to what macros are today, a lot of things have changed. For example, endowment fund. For example, Harvard's publicly announced 13F filing. If you study, right, you will realize that they have huge positions on Bitcoin, right?
Harvard's endowment
Bitcoin
fund.
ETF, right? So they have a lot of positions on
Harvard's endowment fund has purchased Bitcoin ETF.
They have, right? A lot of companies are making Bitcoin a part of their balance sheet. MSTR is a classic case study that they are leveraging their balance sheet on crypto assets, especially Bitcoin. But a bunch of other companies have gotten into crypto that they used to hold, let's say, 100 units of cash on their balance sheet. Now they are saying that, hey, why hold like entire 100 units of cash? Let's just buy maybe 15%, 10% Bitcoin with it, right? So they are doing that. So a lot of corporates have entered into it. A lot of wealth funds have bought Bitcoin, right, very recently. So you need to study what's the value add of Bitcoin. Bitcoin is basically a fixed supply asset. I'll speak on Bitcoin because that's where majority of my crypto investments are.
Right.
So Bitcoin is a fixed supply asset, and the primary USP of Bitcoin is that there are not many mathematically proven, or rather any mathematically proven fixed supply asset in the world. Right? You can either buy limited supply art like Mona Lisa, or if you want to buy something fixed supply and fractional, it's only Bitcoin. Even gold can be excavated more. Right, if you go deeper in earth, right, but Bitcoin cannot. It's already established how many coins will be there, Bitcoins will be there, and the mathematical model is running. So it appeals to a certain set of investors who want to hedge against constant money printing, right? So, and that's a valid hypothesis to keep in mind and dedicate some part of your portfolio towards that.
So you're saying that right now the correction is looking good for you and you want to put more money into Bitcoin and you are ready to take it up to 10% of your allocation. Got it. So that covers the liquid parts of your portfolio. I'm sure you don't have any debt mutual funds, you don't have any FD. So now let's come to the illiquid part of your portfolio, which is real estate, right? So in real estate, you mentioned you have 3 different geographies you focus on. There is Goa, Dubai, and Bangkok, Thailand. So let's start with Goa. Goa, how many properties do you own? How do you invest in Goa? Why should we invest in Goa? How do we look at Goa investment? Please tell us about it.
So I have 7 properties right now in Goa.
Wow.
And 6 are villas and 1 is apartment. So that's what I own.
6 villas and 1 apartment.
Yeah.
Okay. And all of them are like what? Except for your primary residence, all of them are on Airbnb.
Yes. So I rent it out to Airbnb companies, and then they further do Airbnb on it. So basically, it's like me being a landlord who is renting out his property.
So what you do, you buy ready-made old villas.
Yes.
Okay. Yeah. And typically, what prices do they sell for in South Goa, like old villas?
See, it really depends, right? I mean, it's a very fragmented market. Hard for me to tell you, right? Because
like on an average, if I have to buy a villa, 4-bedroom villa in South
Goa, now if you buy new, right, it would be very expensive, right? It would be upwards of 5 CR.
Okay.
When I started buying it, it was maybe like 2.5 CR. Right?
Okay.
So, yeah.
Okay. So right now, would you buy in Goa, South Goa villas?
I have not been buying real estate right now in any place, right?
Okay.
I'm just waiting for the interest rate cycle to play out, right? Then I will buy it at some stage.
Can you explain that? What do you mean by that? Interest rate cycle to play out? Why are you waiting for that?
Yeah. So when, for example, I would like to, it has got to do with my personal portfolio, right? That, for example, I would like to buy whatever I'm buying next on leverage, right? So when the market is more sensible, when the interest rates go down, then that is when I would like to take leverage. This might not be applicable for majority of the audience. When there are less buyers in the market, right? So for example, real estate would usually have like an 8 to 10 year cycle these days, right? Good cycle we have already seen in almost any market in real estate. Talk about replace Goa with UAE, UAE with Thailand, Thailand with Bangalore, Bangalore with Gurgaon.
Right.
So I think we are in year 5 or 6, right? Now I would wait for the interest rate going down and see for the bottoming of the cycle. Now, I'm not saying that price correction will happen because price correction rarely happens on real estate.
Right.
But price stagnation and time correction happens. So if there's a 2-3 year time correction and the interest rates are down, then I will add more real estate to it.
So if the interest rates go down, you're saying the demand for real estate will go up, which will shoot up the prices?
Not really, right? I mean, I don't think that it works that way. It's the bottoming of the real estate cycle, which corresponds with interest rates getting cut.
Okay, you're saying that it has reached a peak and the cycle is about to go for the downturn. It might not
stagnation.
Stagnation. Yes. So you're saying the prices will not keep going up the way it used to go up in Indian real estate market.
In any real estate.
In any real estate.
Almost any real estate. So.
Okay, you're saying it won't keep going up the way it used to.
Yeah.
You will wait for that stagnation period to end, which you feel will coincide with the interest rate cycle, and then you'll sort of go on.
Then I can personally leverage it and buy more.
Okay. So now let's come to where we are right now. How many properties do you own in Dubai?
Two right now.
So this is on rent?
Yes.
And then what are the other, where do you own in Dubai?
I own both the properties in Business Bay.
In Business Bay. So you give it out for rent?
Long-term rents, yeah.
And here I think the rent is way higher than India, right?
Yeah, it is. So this is a cash flow market. So you make like rent almost 6-7% is not very complicated to make.
Okay. And that too tax-free?
Yeah, that's tax-free.
6-7% you're making rental income tax-free in a residential property in Dubai.
Yeah.
Compare that to Goa. I think Goa you're doing Airbnb. What kind of returns are you getting in Airbnb?
I bought it at a decent level. So I still make like maybe 5% there, right?
But then you have to pay tax on top of it.
Yes, I would be taxed. But having said this, it's not a cash flow game in any Indian real estate, right? So no one makes cash flow.
Correct.
Right?
It's for capital appreciation.
Exactly, right? So
that's why it's important to buy land in India because capital appreciation happens better in land than in apartments. Because in apartments, if you buy also, no capital appreciation also, plus even the rental income is 2%.
Correct.
Before tax, right? So coming back to Dubai, you have in Business Bay 2 apartments and both of them are giving you like 6 to 7% rental income.
Nice.
So that's your Dubai investment. And last Thailand, how many homes you own there?
No, only one. That's one for my consumption.
For your personal end consumption. Got it.
There's no point in talking about it from an investment point.
So basically you have about 10 homes in 3 different parts of the world.
Yes.
Amazing. All right. So now let's talk about your sources of income, right? Because to invest all this money, you need to make money first to invest. So now I'm sure your passive income is significant enough for you to never work for the rest of your life.
Yeah.
But there was a point in time when you had to make this money to invest this money. So what are the different sources of income? Firstly, tell me how many sources of income do you have and what are they?
You understand more than anything, right? I mean, for example, from social media, you have so many different sources of income that it's hard to categorize like, okay, ad revenue se itna aata hai and, community.
So I will do it slowly. Okay. One is ad revenue from Google. Sorry, AdSense from YouTube. So basically when people watch your YouTube videos, if there's an ad playing, you make money.
Yeah.
Second source of income is your YouTube membership, where you charge a certain monthly fee. So that's second.
So, and honestly, I don't do so many courses. I only run live programs.
Right.
Wherever, like every 2-3 months, maybe I'll do one. And even for that, I'm bringing down the frequency. So it's about research, right? So for example, if I have like team around this, so I don't want to spend like my money, like doing all this, right? Whatever money I'm collecting, I put it back in the community, right? In terms of whatever organizing meetups and everything, right?
So basically, third is anything that you do with respect to education programs. It could be digital courses, it could be meetups where you
I don't charge for any meetups.
You don't charge for the meetups. No, you have those.
No, so that's events.
Two-day events.
Yeah. So those are different, right? So that's course in a way, right? So I don't charge for any meetups. I keep on organizing meetups in Dubai and all that, right? I don't charge any money from it.
So that's the third one. And then you have brand deals. If any brand wants to sponsor you, then they pay you for that. Then I'm assuming, so these are your active sources of income.
Yeah.
If I'm right, if I'm not wrong, right?
So then I do a lot of options. I coach HNIs, I run a fund, right?
Let's come to that. So before that, let's go to your passive sources of income. So then you have rental income coming from your properties around the world.
Yeah.
Then you also do trading. You do active trading in the markets. You do FNO trading. So you make money from
I don't do trading. I do, because FNO trading gets a very bad rep and name. I do risk managed investing on options. That's how I'll call it.
Okay. So for your core portfolio, you do risk managed investing.
Yeah. I basically turn my huge portfolio into an income generation asset, right? At very low risk.
Got it. So that is this thing. And now let's talk about what you're working on, right? Something that got a lot of eyeballs recently when you said that on social media, right? When you spoke about, hey guys, I'm starting my own hedge fund.
Okay.
Right. And typically when people are starting their own investment company, they usually get, license from SEBI and they set up a shop over there. But you've taken the decision to leave India, come to Dubai, and you've registered a hedge fund.
Yeah.
So talk to us about it. What exactly is it?
Yeah.
How much money have you collected in terms of managing? So would love to know about all of that.
Right. So it's Mauritius-based, right? Honestly, the reason why I moved out of India is not because you could not set up such things in India. It's complicated, but it can be done.
Right.
But there are a lot of restrictions in terms of doing global investing. Now, as I explained on the first half of this podcast, that I have been investing a ton of my own money into international equities. It would be very unfair that I started a fund where I'm collecting people from India and putting it in India, but my personal portfolio I'm putting outside, right?
Correct.
So that does not add up. So for me, like my profession is an extension of whatever I'm doing personally. Right? So if I'm investing my money in a certain way, I require a certain amount of flexibility that I can put my money in global equities where I see like slightly long-term opportunities, right? I can hedge it. So there are hedging products around it, right? Leverage product around it. So hedge funds can do all these things, which PMS typically cannot. In India, you can start an AIF or PMS. So I've started like a hedge fund, right? Which is Mauritius-based investment entity, right? So that's what I'm running.
What is the minimum investment to join this fund?
So it's, when I started out, it was $500,000, right? The
minimum.
Next round. Yeah.
Okay.
So when I'll raise the next round, it will be $1 million, right?
Okay.
So that's what I have been advised by my consultants, that this is the minimum ticket you should keep, because there are a lot of AML checks associated with it, a lot of compliance checks that are associated with it. So you need to invest a lot of time, effort, energy in terms of doing it. It might sound really big that, why can't you charge less, like 100K or 50K? But that's not how it is run, right? These type of products are for a very specific subset of people with a certain net worth, right? And only then you should consider these type of options for investment, right?
Perfect, Akshat. I think this was a beautiful conversation about everything to do with your investments and how you are thinking about the world and where you're seeing the growth happening. I got to learn a lot about the way you think and how you actually operate. Any last piece of advice you would like to leave the audience here with before we end the conversation?
You're on your own journey. Please do not compare it with me, Sharan, anyone else. I know there will be a lot of negative comments or whatever.
100%.
Honestly, the goal of this conversation is to just help you understand the context fully, right? And eventually you're on a path which should align with your ethos values, right? And upskilling, right? This is something where I keep recommending. It's not, though this is an investment podcast, but the idea is that always to make enough money through your skills and then eventually turn that into passive income streams with your investment strategies.
Right. Perfect. So guys, thank you so much for watching till the end. Would love to get your feedback on how you felt about this conversation. Is there any question that you felt like I missed out on asking so that I get that feedback for the next guest? And any future guests that you would like me to invite on this podcast, please drop all of those recommendations down below. And as always, smash that like button and I'll see you in the next one. Before you go, guys, If this episode gave you even one insight that made you think differently about money, don't just keep it to yourself. Share it with your friend or family member who could use it too. And if it sparked a new thought or even made you disagree with me, drop a comment below and tell me why. Your critique helps me make these conversations sharper and more useful for you. As long as you have me subscribed, I'll make sure that you walk away with at least one new thing every Wednesday.